And now, unbiased and independent, here is your Manhattan Weekly Market Report with Noah and John from UrbanDigs.
It's Friday, so you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at supply, 6,079. It looks like it's ticking up, but not a lot. Johnny, show me that chart.
It's not a lot. You're right. That's 0.8%. That's compared to 0.1% we had last week. So it's been a while. We had not even a single percentage point up in the last couple of weeks, and that's kind of why supply feels tight here. And when you look at that overall level, you can see that we're right around 6,000 units, which is a little bit lower than you would expect for this time of year.
Yeah, I mean, you kind of expect supply to bounce up as that listing wave comes in. It makes you question, is there not enough listings coming in? We'll get there. We'll answer that question. Not yet, though. Let's shift over to pending sales, the measure of Manhattan demand, 2,126 things pending and waiting to close. Johnny, show me that chart.
Yeah, and this is, again, I mean, I'm sounding like a broken record, but we are still in reset mode. All those deals that were signed into contract last year are making their way out, and we're still yet to hit that wave from this year. But eventually that will hopefully, bottom out at some point. It's just not there yet.
Yeah, I think we're in the timing band to print the bottom here, and it's probably going to happen over the next 2 to 4 weeks in this thing, and you might even see it bounce back up off the bottom, but it hasn't happened yet. And the takeaway here is everyone must understand. Yeah, supply is ticking up and it's tight, which is good. It's a healthy sign, but the demand level is way, way, way down from where it was. Right, it's ticking up a little bit on a weekly level, but when you look at that overall pending sales, it's a big difference from where we were just a year ago, and that's why the market pulse is at 0.35. And in our opinion, you are in the buy zone right now in terms of the moment in time of leverage for buyers. John, let's go to the weeklies, see if there's any clues there. I'm looking at supply, 311 on a weekly pace. Is that down 2%? Johnny, show me that chart.
It is down 2%, but let's look at that trend, right? You see those weekly numbers coming in, and they're sort of close to where they've been for the last few years, which sort of begs the question: well, if this is trending up, where are these listings showing up in supply? And that's sort of a really good question to kind of dig into, because when you look at that supply level and it's not really doing anything, you have to wonder, well, what's happening to those weekly listings? Well, the weekly listings obviously are going into supply, but focus on what's coming out. You have listings that are being signed into contract, and you also have listings that are just being removed from the market. And those two factors are what's really putting pressure on that overall supply number.
Yeah, this is a very mysterious combination of forces at play right now. It's going to be really interesting to see how the next couple of months shakes up. Let's go take a look at the contract signed weekly pace, Johnny. I see 189. That is ticking up seasonally apace. Johnny, show me that chart.
Yeah, and it's nice. You can kind of see that trend, right? This is the 4th week in a row we've had a higher number, still below that sort of quasi-magical 200 number, which would sort of signify a healthy, busy season. We're close, though, to about 11 contracts away. But you can see that, I mean, you look at these bars, they're still well below where they were. And that kind of gets to your point that demand level still remains muted compared to previous years.
Yeah, and that's why I think some people misinterpret what we're saying when we're ticking up and we're recovering. They just immediately interpret that as a recovery. No, we should be at a much higher level. And when you go to the 1 month, let me just first say this. This 1,322 pace of supply, that is right where we're supposed to be. That is right where we're supposed to be at the end of the month. So it's going to be interesting. So supply is coming in. Supply is coming in. This 677, this is supposed to be notably higher. All right, that is low. This should be in the low, I believe the low 900s, right around there. It's well off, and that's why it feels light. And the reason that it's tight in there is because, just like you said, Johnny, you got 1,300 units coming on, but you take out 677 going into contract, you take out 682, and it kind of cancels it all out. And that's why your inventory is not budging higher, and it feels that way. Very interesting, Johnny. Now let's go to that chart du jour, which is a oldie but a goodie, and it's going to break down monthly contract activity by deal volume, Johnny. And I look at this chart and I just want to say, look at the shift down that we've had. We're no longer declining. We're no longer declining. That is something, but we are in a much lower liquidity environment than we were previously. And we can't understate the shift down here, Johnny.
No, you're right. And you can you draw those lines all the way to the left. You kind of get a sense of where we are, and that would be 2019 levels, but we're not quite there yet. We're still below those levels. In 2019, I mean, it was okay. It was by far not the best year by far, but I mean, it's a baseline, and we're kind of approaching that baseline. So we're still below. We're nowhere near where we were in 2020, nowhere near where we were in 2021. And we're sort of, trying to recover what was there previously.
Yes. And I mean, we're going to shift over here to the dollar volume version of this exact same chart. And it really does put into perspective, again, that record. I mean, look at these numbers that we did. It was just an unsustainable thing. But more importantly, you could see the shift down, right? Pretty sharp, pretty fierce. And we're stabilizing here. I mean, we've said over and over that it seems like we've fallen and we're a little dazed and confused, and we're just kind of chopping around this new lower level, wherever that level may be. And that's where we are right now going into this active season, Johnny.
Yeah, it's the clapper market. It's fallen and it can't get up. I mean, it just seems like everything fell, shifted down, and is basically going sideways here, especially when you view it from the dollar volume perspective, which really sort of that sideways motion kind of gives you a sense that this market is somewhat of in a suspended animation here.
Yeah, it's trying to figure out which way it wants to go. It's already made its move exactly. It's in a suspended animation. It's in a limbo right now, trying to dictate that next move, and it's going to be choppy probably the next couple of months and quarters as we get the data in from this down cycle. Very good stuff, Johnny. Thank you for whipping up all this data. That is John Walkup. I am Noah Rosenblatt. We're both from UrbanDigs. Don't forget, you got questions, we got answers. Please visit our forum right down here. And if you want any of the charts that John whipped up, they'll be right over here in just a few moments. Other than that, this has been your weekly Manhattan Market Update, and we'll catch you later.